All of this, I'm joined by George C.A., CEO of Annandale Capital. George, welcome. I'm not sure if I said your name right.
You were close, Derek.
Close.
It's pronounced C like the ocean.
C,
so.
okay, like the ocean. You know, I'm glad you're here on what was a really big day on Wall Street, a down day. What happened this morning? I mean, the trading just kind of fell off a cliff early on.
Completely. And you know, it's funny, our condolences to the families affected by the virus. And obviously, we feel for the oil and gas producers out in Texas that are attempted to be bankrupted by the Russians right now. But we professional investors love it when the market does this because it gives us a chance to buy at much lower prices. The only problem with that right now is you talk about Black Monday in 1987 as a percentage move, it fell triple the amount we fell today.
Right. I mean,
so we could go quite a bit further down.
And it triggered this kind of halt in trading, right, which is a stopgap measure to keep us from really just bottoming out completely, right?
That's exactly right. Yeah, those triggers are in place for a good reason, and they help keep us somewhat stable today and orderly.
So oil is really driving this. I mean, that's what a lot of the analysts are saying. Are we really at the mercy of what's happening in Saudi Arabia and Russia, or is it the coronavirus?
You know, it's kind of a deadly 1-2 punch. It's like Muhammad Ali hit us once with the coronavirus, and then he laid us out with the oil plunge. And I think it was very intentional on the Russians' part, and we should be looking for ways to make sure they feel some pain as well. They're going to feel pain in their surplus right now because they got 500 billion of it, but they're going to start bleeding red ink at these prices just like everybody else. But they're willing to stomach the pain to inflict it on everyone else.
So where do the markets go from here? I mean, what do we expect tomorrow? Another down day, or will we bounce back as investors look to buy some of these lower trading stocks? The
ironic thing about the markets is when we're in a bull market, it's a nice steady rise pretty much straight up. And in bear markets, you have a lot of volatility up and down. So we will see some dramatic counter moves up at the same time. But until things quiet down and until the number of coronavirus cases outside of China starts diminishing on a daily basis, I think we're going to have a lot of volatility, and it will be mostly to the downside.
And how do we protect ourselves from that? Just kind of hunker down and stay the course?
Well, I think you have to make your own individual risk assessment. If you're 100% in stocks and you can't sleep right now, you probably ought to go ahead and reduce your exposure a little bit. But if you're only half in the stock market or 20% of the stock market and you have a lot of dry powder, it'd be a really good idea over the next 3 to 4 months to very gently layer in a little bit at a time.
All right. George C. Capital, CEO of Annandale Capital, thanks for joining me.
Thank you, Derek.
All right, still to come here on Stateside.